Welcome back to Fast Market, everyone. Kevin Hinks back here for our middle segment of the show. Joe Mazzola is going to stick around with us. And now I want to welcome in Mr. Andy Swan. He's the co-founder of LikeFolio.com. Andy, did you know that 70% of the people describe an all-around better mood when Friday comes? I know it works on me. You've got a stock here that just IPO'd this week, Andy, and I'm thinking when I see the name come across my screen, I'm like, oh, Andy's got a feel-good segment about a new shoe company that's popping up on the screen, but you're going to give me a big Lee Corso not so fast, are you? You don't have some very good data on this name.
Yeah, not very good data. Yesterday we covered RIVN pretty positively going into the IPO.
Yes.
In terms of consumer demand, consumer respect for the company. I think we had RIVN as a hot IPO, and I would classify Allbirds, unfortunately, as an IP no. When you look at the data, it's actually really bad, and it looks like one of those companies that really went public because there was not much left to do. They kind of missed the growth curve, and when we look at it, you can see. Total consumer mentions of Allbirds products really dropping going into the IPO over a sustained period of time. That is something that we really hate to see as a company comes public. It's on the wrong side of the growth curve. You can see that there. This is the number of people just mentioning Allbirds products and shoes. And when we compare that to peers is when it gets extraordinarily interesting, because actually Allbirds products is one of the worst performers that we see when we compare 2019, you kind of have to take out some of the 2020 levels, compare 2019 to 2021, and we see consumer demand for Allbirds shoes down 56%. And when you compare that to Skechers down 40%, but then Crocs up 45%, another competitor up 61%, it's just very clear that Allbirds is on the losing end of a competitive battle right now, and you see that reflected in the IPO price. It's just the exact opposite of what we saw with RIVN, where investors were kind of following the consumer's lead and really getting excited about companies that consumers are excited about, and not getting excited about companies that the consumer's not getting excited about. So I think it's a tale of two IPOs here on Fast Market to end the week.
Yeah, no, Andy, one of the things that I really looked at when I looked at Bird or Allbirds, if you will, is just the net change in sales from 2019 to 2020. And, given, we were right in the middle of the pandemic, but if you look in 2019 to 2020, you saw in the U.S. and just in the U.S. alone, net sales were up 0.23%. I mean, basically unchanged. All of the growth, if you saw anywhere, was really international, and that's still a small component of this company. So when you're comparing kind of those figures with what you're seeing with mentions and social media mentions, how do you draw those conclusions? Is it that the people are really just kind of moving away from this brand and looking for others, and that's kind of driving those low sales forecasts? Is that what you're looking at?
Yeah, it really is, because when we compare it to what's happened with Crocs, exact opposite story, and they didn't use a pandemic as an excuse for slow growth. It was just the opposite. We saw Crocs, develop incredible partnerships, and the stocks reflected that. Crocs, for anybody that's been following me or LikeFolio, this is one of the names we've been pounding the table on for a few years. The stock's been up from $10, I think, to now it's over 173, doing everything right. And when you compare that to Allbirds, it's just not even in the same ballpark. And there's another private company called Hey Dude shoes that are coming on, and this comfy casual shoe market is getting crowded. And when markets get crowded, we really think LikeFolio's consumer insights data tends to really play out extremely well, because winners and losers begin to emerge. And in this case, we think Allbirds really went public as they're becoming a loser in the space, which is something investors should be aware of from a consumer insights perspective.
Andy, when reading about this company, they're known for their wool running shoes. Wool running shoes. Now, I'm a runner. I cannot imagine a scenario where I would run in a wool running shoe. But now it gets worse. They make shoes out of tree fiber. They make shoes out of sugar cane, and they make shoes out of, here's from the winter, crab shells. What? Crab shells? You're making shoes out of crab shells, Andy. This is like, yeah, you lost me at crab shells.
Yeah, well, you know, I understand what you're saying, but the comfort level of these shoes is very high. People like the comfort level, so you kind of have to get past those things. I do think that they have carved out a really nice niche in sustainability, you know, and that's something that's important to a lot of consumers worldwide. So they have that going for them. They actually weren't allowed to actually use that word, I don't think, in the SEC filings for the IPO, the word sustainability. So that was probably hurtful to them. But overall, you know, I think this is a company that's had great success in the past. It's just now, you know, in a really crowded market, and there's a lot of really comfortable shoes out there that are fairly cheap that are competing with them, and it's tough sledding from here.
They missed their window, basically. Yeah, they should have gone public a while ago, it seems like. And now, you know, I think the investor sentiment now is like, well, did you come public because you wanted to raise cash? And basically that's kind of what it comes down to. And you did see some insider selling already this week. There's been postings on insider selling that's taken place. And then if you look at kind of the way that the SEC filing shows, it gives 30 days to see if any of the companies that help take it public, if they want to buy more shares. So that'd be interesting to see after that 30-day mark. If some of those investment banks step in to buy some more. It seems like at this point that might not be the case, but you never know.
Yeah, you never know. And I think, you know, drawing the distinction between what we saw with RIVN yesterday and Allbirds now is really just this idea that, you know, a company can be extraordinarily overvalued if investors believe that consumers are rushing to the table and will be there when the product is ready, in the case of RIVN, versus, you know, something like an Allbirds that has already kind of seen that growth peak, at least in terms of the data that we track. And, you know, investors just can't give a company like that the benefit of the doubt, especially in a really crowded space. And so, you know, long term, this market is fickle. We've seen companies come in and out of favor, both with investors and consumers. So it doesn't mean Allbirds is down for the count. It just means, you know, really tough time for them to try to IPO, and it does smack a little bit of desperation to raise capital.
Yeah. All right, Andy, I have to live up to my reputation that Alex Coffey gave me as a serial optimist. So let's end this on a positive note. The company On Holding that is the top of your purchase intent, that's the athletic shoe company that Roger Federer is an investor in and a partner in. What is that doing? I hate to press you on this, but what is that doing that is making them so popular?
Well, they have, in the universe that you're looking at right now, not only do they have the highest level of growth in terms of consumer demand in the LikeFolio universe of these comfortable casual shoes, but they also have the highest consumer happiness level. They have the most comfortable shoe in the comfortable casual shoe market, according to consumer data that we put out. So they're doing both things right. They're growing their distribution, they're growing their demand, and they're continuing to maintain that consumer happiness, which is a tough thing to do. Companies rarely do that. They rarely grow fast and keep customers happy. And when they do, long term, those are your really outlier winning stocks historically that we've seen.
Yeah, this is a name that it's an athletic shoe that Roger Federer is involved in, and it's interesting that it popped up on your screen as so incredibly positive. But anyway, Andy, we're going to let you go. Thank you so much for coming on. This is a great, and I'll tell you, this was counter trend, frankly, to what I thought it was going to be. So Joe and I now have to go and completely change the way we're looking at this name. But Andy, the data is the data, and the data never lies. Andy, thanks for coming on. As always, that's Andy Swan, co-founder of LikeFolio.